Okay, welcome back. Welcome to video number 21, price action. Price action is the second weapon in our armory within the gatekeeping process. So again, here we're trying to cleanse our ideas, and our ideas at this stage are still just ideas. And when we're monitoring price action, we do this in conjunction with our technical analysis, and we do this on our watch list. And the easiest way to actually teach you this is to show you by doing. So what we're going to do is just actually go straight to the computer screen, and I'm going to show you a watch list with many spread trades on and trades in currencies and commodities. And we're going to go through this watch list, and I'm going to show you the processes that you go through each week in order to generate good trades. So let's go over to the screen, and I'm going to see you at the end of this video with a full rundown and summary of the gatekeeping process.
Okay, so welcome back to the computer screen. What we're going to be looking at here is the gatekeeping process, and the processes that you go through for monitoring price action and technicals. And what we're going to be looking at is a watch list. So we're going to be looking at primarily this spreadsheet called the watch list example, and the other spreadsheet which is called watch list spreads. Watch list spreads is basically just a template of watch list example. And we're also going to be just going online and getting publicly available data, and we're going to be going through processes on this watch list that you would go through on a weekly basis when you're starting out. So let's go through this spreadsheet, and there's quite a few concepts that you have to pick up here. Firstly, when you look at this watch list, you'll see lots of ideas on the watch list, and what you need to understand here is that this is the first thing really, is that when you're running a portfolio, you have to look at your gross exposure that you actually want in your portfolio, and then you have to create a watch list to service that gross exposure. So when we look at this example has 24 spread trades on the watch list within stocks, and we also have Forex and commodities, so energy, metals and food. Now if we're just staying within stocks, we have 24 spread trades here. Now what you're looking at when you're seeing this spreadsheet is actually a real example of somebody that's taken this course, and they've gone through the course and then created their own watch list, and 8 weeks later they're now running their watch list and updating it every week. And when you look at it, the first thing that you should notice is that they have 24 ideas, and also they have 6 situations that have actually been taken off the watch list. And in fact, when you look at the accompanying text, these spread trades here have actually become real positions in the portfolio. Now what do we mean by working backwards from your gross exposure? Well, if for example you want to have a portfolio of $240,000 gross exposure, which this person actually has, then to service that portfolio, you're going to need quite a lot of ideas. So if we're working backwards from 240,000, if this person has a self-imposed position limit of $20,000, so if they're doing a spread trade, $20,000 long and $20,000 short, then that just means that they're going to have 12 positions in their portfolio, or 6 spread trades. So that's going to equal $240,000 gross exposure. So if we're working backwards from that, and we're going to be creating a watch list that actually services our portfolio well, then it's pretty obvious that we can't have just 6 spread trade ideas, because all that happens is when you're running your real portfolio, we're admitting to ourselves that clearly we're not superheroes. We're going to get trades wrong. So at any one point in time, you're going to have trades that are winning and trades that are losing. And if you don't have a well-maintained, updated and fresh portfolio, as in lots of new ideas coming onto the watch list, then that watch list can't service your portfolio with good trades to replace losing trades. So what you're trying to do here when you're running your watch list is 2 things. Firstly, you're trying to stop yourself making bad trades. So your ideas go on your watch list, and you're stopping yourself from firstly doing bad trades and also entering potentially good trades at the wrong time. That's the first thing. We'll come back to that a little bit later when we look at a specific example. But secondly, what you're trying to do is you're trying to spoil yourself with good ideas and good trades. So if we just look at the numbers for a second, we've got 24 trades, or 24 ideas, sorry, at this stage on the watch list, and 6 have actually been taken off, and they've become real positions. So that's going to leave 18 ideas on the watch list, which means if this trader has 6 spread trades, so 12 positions, they have 6 spread trades in their portfolio, it means they've got 3 times as many ideas on their watch list as they do live positions in their real portfolio. And as a general rule of thumb, what you should really be doing is your watch list should have a minimum really of 2.5 times the amount of ideas as versus real trades or real positions in your portfolio. So you should use that as a ratio. So whatever the size of your portfolio in terms of positions, your watch list should really have a minimum of 2.5 times that in the amount of ideas that you have on your watch list. So that's the first thing. Now let's go through the spreadsheet a little bit and start breaking things down, and we'll come on to some other concepts when we look at a live example. So the example that we're going to look at here is EasyJet IAG, this idea that's on the watch list here. And EasyJet and IAG, they both trade in the United Kingdom on the London Stock Exchange, and EasyJet is a low-cost airline carrier, and IAG is a global airline carrier, primarily Europe and transatlantic, but it's a global carrier. And IAG is basically British Airways and Iberia, and IAG, International Consolidated Airlines Group, is the holding company for those 2 brands, for those 2 companies. So we're looking at the idea here on the watch list of long EasyJet, short IAG. And the long entry and the short entry of this idea gives a spread of 438 on the watch list. And we haven't actually entered this position. What this is a reference price. So we're referencing the time, the price of these stocks at the time that we put them on the watch list. And this gives us a reference spread of 438. So when we scroll across from here, we have this repeated again here, but we also have the current situation. And the current situation, this is what you update every week. So the current situation gives EasyJet at 10:31 and IAG, International Consolidated Airlines Group, at 2:58.9. And when we scroll across here, this gives us a spread of 398, which means overall this spread from the reference price when it originally went on the watch list is down 9%, and it's been on the watch list for 7 weeks. And this is the second concept that you have to pick up here. So concept number one, the amount of trades that you need, or the amount of ideas that you need on your watch list to service your portfolio backed out. So spoiling yourself with a good amount of ideas that become good trades. So don't forget that concept. The concept that we're moving on to now is really the primary reason why we have a gatekeeping process and why we run a watch list. And that's really because we want to make sure that we don't put on bad trades with our real money, but also we want to make sure that we're not mistiming good trades. So we're back to this example again of buying an asset at, say, $100 or a stock at $100, and then at this stage it's an idea, and what you have to assume is that everybody in the world thinks when they have an idea for a trade that it's a fantastic idea. Otherwise you wouldn't consider committing capital to it. So just assume that every idea you get, you're obviously going to think that it's a great idea. We're all only human. People think that all the time. Of course they do. But that's the typical retail trader mistake. The typical retail trader mistake is to get an idea and then just put the trade on straight away. Well, the professional trader realizes that they're only human, and they have a gatekeeping process to make sure that they don't do anything stupid. So imagine if you think you have this great idea and you buy this stock at 100 and you think that a good stop loss is 90, and then you just put the trade on straight away at 100. Well, at that stage it's just an idea. So you put the trade on at 100 and then you get stopped out at 90, and then it goes to 500. Well, that's the cardinal sin in trading. What you've actually just done is you've put on an idea, and an idea at that stage is just an idea. It's not a trade. And you put this idea on straight away, you get stopped out, so you lose money, but then you're proved to be right. What you could have done was just put the trade on the watch list and then waited for that idea to actually start working before you committed capital. Instead, you committed capital straight away and you just got stopped out, and then you missed the opportunity to make $400 on the upside. Now think of it in the opposite situation. You've got this idea, and you put it on straight away at 100, you get stopped out at 90 and then it goes to 0. Well, that's just proven to be a bad idea and a bad trade. But you've just lost 10%, and you could have avoided losing that 10% by just sticking it on a watch list and monitoring the price action and never committing capital to a trade that wasn't working. So you would have saved yourself 10%. This is why we have a gatekeeping process, to stop ourselves mistiming potentially good trades and to stop ourselves getting into bad trades, full stop, period. So you have to have this gatekeeping process and make sure that you go through it each week and spoil yourself with enough ideas that they become, or a good portion of them become, good trades. And don't forget, everything that ends up on your watch list is an idea that ticks all the boxes in terms of agreeing with your fundamental views of the world, the industry view, and the stock view. So by the time it ends up on the watch list, it's in full fundamental agreement with your views, and then what you're trying to do is cleanse your idea, and you're trying to add value to your idea by putting it on a watch list and monitoring the price action and technicals. So you're trying to add value to the idea and get into the idea when the price action is good and the technicals are good. Now this example here, EasyJet IAG, this has lost 9% on the watch list over 7 weeks. So imagine if this trader just put this idea on straight away, they'd be losing 9%. That's not to say this trade isn't a good trade. It could actually be a phenomenal trade. But what we're trying to do here is we're trying to make sure that we get in at a good price, and we're trying to make sure that we just don't enter a trade that's bad, full stop. So let's have a look at the breakdown of these 7 weeks. And what we can see by scrolling across is that the price action is pretty choppy, and week 6, this is where pretty much all of the underperformance has come from. And when we look at the price action in absolute terms, it's not working. This trade is not working, so we shouldn't be committing capital to this trade. Now when we look at all the rest of our trades, what are we looking at? Well, we're looking at a bunch of ideas that are working and a bunch of ideas that are not working. Well, the two back of the envelope rules, if you like, there are no rules in terms of committing capital. That's the third concept we're going to come on to in a minute. But the two kind of back of the envelope rules of thumb when committing capital and considering price action is that, firstly, you shouldn't commit capital to losing trades or losing ideas. That's the first thing. Secondly, what you're looking for is consistency in price action, so consistently positive returns. And if we look further down here, we can see potential trades, so ideas. We've got ideas here that could be potential trades where the price action is positive and the weekly return looks fairly consistent. So this one, SWFT long and short CAT, and also HTZ and CAT, positive and fairly consistent price action. So we're not going to go into every single idea on this watch list. You can do that in your own time because you've got the spreadsheet in the downloads area. But just know the concepts here, so you understand that you don't commit capital to positions or ideas that are losing, and you don't commit capital to losing trades or losing ideas that have choppy price action. What you're looking for is the opposite. You're looking for positive price action, and you're looking for consistency in returns. If you do that over your lifetime, this will not only save you a lot of money in the gatekeeping process, but it will also make you quite a lot of money as well, because you're cleansing and adding value to every idea that you've got, and that can only be a good thing. So what we're going to do now we've picked up on those three concepts, so we'll just run through those again. Enough ideas that turn into good trades, so a proportion of those trades will turn into good trades. Enough ideas to service your portfolio. That's the first thing. Secondly, most important one, the reasons why we have a gatekeeping process: to stop ourselves mistiming potentially good ideas, and to stop ourselves putting on bad trades, full stop, period. 3, committing capital, and again, there's no rule book here. We'll come back to this in a second. There's no rule book for committing capital, but a back of the envelope rule of thumb: don't commit capital to trades or ideas that are not working on your watch list and have choppy price action. You want the opposite: positive price action with consistency, or showing consistency in returns. So they're the three concepts that you need to get used to straight away. Now the process we're going to go through now is I'm going to simulate a process of updating your watch list. Now what you'll notice is all of these trades here, all of these ideas are actually within, if we go to the bottom of the sheet, the spreadsheet, are actually within their own individual sheets. So what we're going to look at here is EasyJet IAG again as an example. So we're going to click in to this sheet, and we can see that EasyJet International Consolidated Airlines Group has its own sheet, and within that sheet we've got the data of both stocks and the spread. We've got the daily data, and if we scroll down on the sheet, this daily data goes all the way back to 2003, and we've got the charts as well. And we've got the chart which goes right back to the beginning of the spread, so as far back as the data goes, and we've got a zoomed in chart for the last 2 years. And we're going to go through the process now that you go through every week when you're running your watch list, updating it and maintaining it. So you have to do this, what I'm going to show you now, you have to do this for every one of your spreads. Don't worry about it too much. Once you get used to the processes, it becomes second nature, and you end up doing this on a weekly basis within just a couple of hours, and it adds a lot of value to you, to your life, and adds a lot of value to you as a trader, because it saves you a lot of money and also makes you a lot of money. So first thing we're going to do, we're going to simulate this idea that it's the end of the week and you're now updating your watch list. And we're going to count 5 lines, and we're going to insert 5 new rows into the data area. And what we're going to do now is go online, and we're going to get the EasyJet and IAG data, work out the spread, and update the whole watch list. So let's go online. And let's go to Yahoo Finance. We'll click into there, and what we're going to get now is we're just going to get the EasyJet data. So we click into EasyJet, and we go into the historical prices, and we've got the daily data here, and the data that we want to get is actually from the 25th of March up to and including the 29th of March. we want these 5 days here. So we're basically simulating that it's Saturday, April the 1st, 2013, and you're sitting at your desk at home, in the office, wherever you like to do this, and you're updating your watch list. So let's get this data. We scroll down, we click on download to spreadsheet, and we just open up the spreadsheet with the data. As I'm doing this video, by the way, it's April 13th, so the last day is April the 12th. So we're just going to get rid of all of this data here, because what we want is the 25th to the 29th. So this is the data we want, and if it's Saturday, April the 1st, this is what you're going to see when you download this data. And actually, on this day in the UK, on Friday the 29th, it was a bank holiday. We had the same close as we did the day before and no volume traded, but this was a Friday. First thing we're going to do is actually just copy that data, and we're going to go back into the sheet and insert the dates here, and we'll go back to the EasyJet data and take the adjusted close including dividends, and we go back into EasyJet and insert that. Now we need the IAG data, so we just go through the same process. Download this into spreadsheet, International Consolidated Airlines Group. So make sure that we have the right dates here. We got 25th to the 29th, and we just take these prices here. Insert them, and then when we're updating our spread, we just autofill up by clicking on the box here and autofill, and by dragging up. So you can see here the spread last week. So we're still simulating here that it's Saturday, April the 1st, 2013. The spread a week ago closed at 398.22, and now the spread is at 426.5. So the spread has basically gone up about 6%, which is good news, because that means positive price action. So we'll update this sheet in a minute, but first we're just going to update the charts. So now we click on the charts, and what you'll see when you click on select data is that we only have up to row 8 from row 8 selected. So we have to select row 3 to update the charts. So we click on the series, edit, and you'll see here D8. We just need to change that to a 3, and we do that again for the dates on the horizontal axis. We update that, and here you can see the spreads updated with its positive price action. Just get rid of that key. We do the same on the chart below. Right mouse, select data, edit, change D8 to D3 for both the vertical and the horizontal axis. And we can see it's updated there. So now we're going to go back to the main sheet here, our top sheet, the main watch list sheet, where we're monitoring price action, and we're going to update week number 8, because that's the data that we've just pulled of Yahoo Finance. The data we